In today's video, we're going to review 10 of the best stocks to buy in 2023 that could make you rich. But before we start, please don't forget to like this video and subscribe to our channel Tradely for weekly updates. Let's get started. 2022 was one of the most trying and difficult years in history for investors. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite, which is based on growth stocks, all fell by between 22% and 38%. However, history shows us that putting money to work during bear market declines is a smart move, and every bear market has been left in the dust by a bull market rally at some point. This means that 2023 could represent a new beginning for long-term investors, and all the more reason to go shopping. 10. Moderna Incorporated, mRNA. Moderna is a biotechnology company that specializes in the development of mRNA-based therapeutics and vaccines. The company's COVID-19 vaccine was one of the first to be authorized for emergency use in the United States, and it has since become a key player in the global vaccination effort. With its innovative approach to vaccine development and the growing demand for mRNA-based therapies, Moderna is well positioned to continue growing in the years ahead. Stock 9. Coca-Cola Company, KO. Coca-Cola is one of the world's largest beverage companies, with a market cap of over $200 billion. The company produces a wide range of soft drinks, energy drinks, and other beverages, and its products are sold in more than 200 countries worldwide. With its strong brand recognition and global reach, Coca-Cola is well positioned to continue benefiting from the growing demand for beverages around the world. Stock 8. Johnson & Johnson, J&J. Johnson & Johnson is a diversified healthcare company that produces a wide range of medical products and services, including pharmaceuticals, medical devices, and consumer health products. With its strong brand recognition and broad portfolio of products, the company is well positioned to continue benefiting from the aging global population and the increasing demand for healthcare products and services. Stock 7. NVIDIA Corporation, NVIDIA. NVIDIA is a leading designer and manufacturer of graphics processing units, GPUs, and other high-performance computing chips. The company's products are used in a wide range of applications, including gaming, data centers, artificial intelligence, and more. With the growth of these industries, NVIDIA is well positioned to continue benefiting from the increasing demand for high-performance computing solutions. Stock 6. Visa Incorporated. Visa is one of the world's largest payment processing companies, with a market cap of over $500 billion. The company operates in more than 200 countries and territories, and its credit and debit cards are accepted at millions of locations worldwide. With the rise of e-commerce and digital payments, Visa is well positioned to benefit from the shift away from cash transactions. Stock 5. Amazon.com, Incorporated, AMZN. Amazon is one of the largest online retailers in the world, with a market cap of over $1 trillion. The company has diversified its business over the years to include a wide range of products and services, including cloud computing, digital streaming, and more. With its strong brand recognition, global reach, and innovative approach to business, Amazon is well positioned to continue growing in the years ahead. Stock 4. NextEra Energy, ticker NE. Electric utility stock NextEra Energy is a fifth top stock to consider buying in 2023. In addition to being a dividend stock, with a yield of around 2.5%, NextEra Energy is also a leader in renewable energy. The company has made a big push into wind and solar power in recent years, and it's currently the world's largest generator of wind and solar energy. This is important because renewable energy is becoming an increasingly important part of the energy mix. Governments around the world are investing heavily in renewable energy sources as a way to combat climate change, and many utility companies are following suit. NextEra Energy is well positioned to benefit from this trend, both through its existing renewable energy assets and through future investments. Stock 3. Berkshire Hathaway, ticker BRK.A. BRK.B. Billionaire investor Warren Buffett has been the CEO of conglomerate Berkshire Hathaway for over 50 years, and his track record speaks for itself. Over that time period, Berkshire Hathaway's Class A shares, which trade for over $400,000 per share, have averaged an annual return of 20.1%. One key factor behind Buffett's success has been his focus on cyclical stocks companies whose fortunes rise and fall with the broader economy. Despite inevitable economic downturns, Buffett recognizes that bull markets tend to last much longer, and he positions Berkshire Hathaway's portfolio accordingly. In addition, Berkshire Hathaway is known for its love of dividend-paying stocks. In the coming year, the company is expected to collect nearly $6 billion in dividend income. Dividend stocks have historically outperformed non-dividend-paying stocks, making them a smart choice for long-term investors. Stock 2, Meta Platforms, ticker Meta. First up is the world's leading social media stock, Meta Platforms. Despite having a miserable year, the concerns about Meta's revenue and spending on the metaverse appear overblown, which sets the company up nicely for a solid bounce in 2023. Meta is the parent company of Facebook, Instagram, WhatsApp, and Facebook Messenger, which are four of the most popular social media sites in the world. By the end of October 2022, 3.65 billion people worldwide will have visited at least one of these sites each month, which is more than half the world's adult population. Even though the economy has been bad at home and abroad, the number of monthly active users on Meta has continued to grow. Advertisers are well aware that there's no platform on the planet that gives them a better chance to reach audiences with their message than Meta-owned assets. The other thing to consider is that Meta has the liberty to spend aggressively on the metaverse thanks to the $40.5 billion in cash equivalents, and marketable securities on its balance sheet, as well as the $58.5 billion in operating cash flow over the trailing 12-month period. Meta wants to set itself up as a key entry point to the metaverse, which could be worth a lot of money. Stock 1, Enterprise Products Partners, ticker EPD. A second top stock that can make you richer in the upcoming year is the oil and gas company Enterprise Products Partners. Enterprise pays a whopper of a dividend, 7.5%, and it's boosted its base annual payout for 24 consecutive years. While some of you might be worried about investing in oil stocks as chatter about a U.S. recession swirls, Enterprise Products Partners can sidestep these concerns. That's because it's a midstream operator. It controls more than 50,000 miles of transmission pipeline, 24 natural gas processing facilities, and can store 14 billion cubic feet of natural gas. Midstream operators lean on fixed-fee or volume-based contracts, which makes their operating cash flow quite predictable, no matter how volatile oil and natural gas spot prices are. Additionally, the global energy complex is broken or at the very least impaired during the recession. Capital investments dropped by a lot, and Russia's invasion of Ukraine has made it harder for some parts of Europe to get oil and gas. With no immediate global supply fix, energy commodity prices should remain above average. For this video is all. Subscribe and we will see soon.